down. All right, welcome to episode 25 of Trade Secrets. We are so excited to be here at the Wampum Underground with a special guest, Alan Lagunov, who is one of the owners of the Wampum Underground and the founder of Bellevue Street Capital. So welcome, Alan.
Thanks for having me, guys.
Yeah, we're excited. Came in from Chicago to be underground. So let's start off.
Also our first doubleheader. First podcast doubleheader today.
Yes, 2 back-to-back.
Yep.
Yeah. Thanks for making it here. It's great. It's a good view.
I just realized this. We'll never do another podcast in our old office.
That's correct, because we're moving in less than a month.
We didn't do a good job at sending that off.
But so Wampum Underground is where we're at today, and if you can tell, if you're watching, we are a little chilly. It's 55 degrees here every single day. The only thing that changes is the humidity. But why don't you dig in and tell us about Wampum and where we're at and why we're here.
Sure. So Wampum Underground is obviously a former limestone mine. They room and pillared it when they mined it, so it created like a really unique kind of storage asset that over the last 30, 40 years has really kind of grown into its own. Wampum is really kind of 2.5 million square feet. 2.2 million of it is really usable. About 1 million of it is improved, so this obviously would be what we considered improved, and then there's another 1.2 million of what we kind of dark cave with some lighting, and I view it as kind of having 3 different businesses inside kind of one asset, which is.
And before you dig into those 3, like just to give the guests some perspective, 2.5 million square feet. Like Amazon builds the biggest boxes in the country, and those are 1 million square feet. And this is 2.5, so 2.5 times that, and it's all underground. We're like 200 feet below the surface right now, right?
Yeah. I mean, trucks and we have semi-trailers driving in here all day. So we're at grade level, and the kind of, the mountain comes up behind us. So currently 200 feet underground, but, you just walk outside and onto the road, and you're not like. People have the perception that you're kind of going down somewhere, which we're not. And 2.5 million square feet's like, I think I did the math once, it's like 60 acres.
I think it's even bigger than that. I think the surface acreage here is 300 some acres?
Yeah, 320. We don't encompass, it's not underground.
Right, and we lose some space because of the columns. People don't realize, we always say former limestone mine. It still is a limestone mine. It's held up by columns that you can see behind us that are approximately 30 feet in diameter.
Yeah.
Because if you took those columns out, then there wouldn't be a mine anymore. Well, it would just cave in. So, anyways.
That's a great thought.
Well, it's a lot more sturdy than any surface building.
Right.
Like this will still be here when a lot of the stuff that was built on above ground kind of has already decayed or not been maintained well enough. This is.
And when you bought it, that was one of the funniest things for me, having represented the people who owned it before you. You wanted to do a lot of due diligence around the structure and the environmental, like, is this going to be here 100 years from now? And it's like, as the seller, they were like, it's been here for 100 years. What possibly could happen? But as the buyer, who's totally unknown, never bought anything underground before, you're like, well, is it going to be here? Or is it going to cave? I mean, looking back on it, do you still think that that's like a funny, or are you glad that you spent, lots of money digesting that?
I think we needed to spend the money digesting it. We needed to get comfortable. We needed to make sure our investors who had also never heard about something like this to get comfortable. Now, it's been 2.5 years. Now I'm not that comfortable because every time I tell the story, people are like, wait, and I have to like rethink through it and resell it. And I'm like, yeah, no, it's fine. And it's actually much more secure than above surface mine. And so it keeps it fresh in my mind that like, I had to go through that process,
sure,
and not like be complacent about it. But now it's. I think it's actually quite unique and has a ton of advantages.
Yeah, and so since we've been working on this project, I have learned a ton of things about limestone mines that I never in my whole life thought I would come to have that knowledge. But I'm sure you have gotten some really interesting questions or found out some really interesting things about subterranean real estate. So is there anything that stands out in your mind as like something an investor asked you where you're like, that sounds bonkers, but then you start doing like some digging and you're like, oh, that was actually a legit question, and there's an interesting answer.
Yeah, I mean, we've had people, I think the most obvious one is people are like, well, it's colder, so can you do data storage? And you have seen in other limestone mines around the country create data storage. I think for this particular asset in this location, it doesn't quite work. The one thing you have to think about is obviously what's your power costs and what's your clear height, and can you make it efficient enough? And do you have enough water and to sustain like the cooling and heating system? And so we've looked at things like that, but haven't gone too far from kind of just increase, creating better efficiencies, create some marketing that wasn't really being done before. Restructuring the organization, pricing models, and how we're dealing with customers, and kind of operated a little bit more of an institutional level than it maybe was previously.
And that's a good segue back to where I interrupted you. There's like three things going on here, right?
Yeah.
So inside this 2.5 million square feet, we're sitting in a brand new warehouse. It's 55,000 square feet. Somebody could lease this. It's got docks, office, restrooms. I mean, effectively, we've got a 55,000 square foot building underground that somebody could lease tomorrow, right? But talk about what are the three components of the Wampum Underground?
Sure, yeah, okay, so of the 1 million square feet that's kind of built out that looks like this, half of that is leased, like to tenants on leases, like any normal above ground multi-tenant building.
So just like an industrial park anywhere in America?
Yeah, exactly, multiple tenant industrial park, big building that's just kind of broken up.
Docks, parking, offices,
exactly.
The whole 9 yards.
Exactly. We have, there's dozens of people that come and work here.
We have
roads. It's almost like, just an underground roadway network that has its own warehouses as you go through it, like an industrial park.
Yep.
Almost like a multi-building industrial park. So that's like, call it 500,000 square feet. Then there's another 500,000 of improved, which is, at the moment, this fluctuates, but like, call it 300,000 of our own, we operate our own 3PL business.
What's 3PL stand for?
So
I get that question all the time because I use it and people are like, what the hell does that mean?
Yeah, so it's like third-party logistics. I think what we do, maybe, people who are really in that space would call it more like warehousing, where we have customers, it's not like tenants, they're customers, and we basically make sure we have enough space for them, and they say, hey, I'm bringing in stuff to store, and we have staff and guys who are, we're not doing any of the trucking, but our guys are unloading and we're storing stuff for them. We have some added on services on top of it, but customers that like, obviously, the humidity and climate control nature of our space, and that, hey, I need to, this isn't like a freight forwarding, it's not gonna sit here for 6 hours, it's gonna sit here for 6 weeks or maybe even 6 months. And it makes more sense for me to find something a little bit more economical to store something longer term.
You're like the overflow valve, right?
For some people, yes.
Yeah.
For some people, we have some customers that, their volume of needs fluctuates dramatically. And so our value add is that, hey, we can take on thousands of pallets normally and part of the reason we did this expansion is to continue to have that flexibility for our customers. And so we could flex up or flex down, and they really like that. And so some of them are not committing to, hey, I'm committing to 50,000 square feet for 10 years. I need a little bit more flexibility. We have had customers transition some of their divisions. If they have multiple divisions, some of them have realized, hey, I'm using this all the time. It makes sense to make this more economical. I'm gonna commit to lease space or commit to pay like a minimum number of pallets each month, gives us some more surety on our side of the cash flows, and allows us to pass that on to the efficiency for and pricing for the customers. And so that's,
Plus or minus, how many pallets are there at any given time here that are not in somebody's private warehouse? These are just the ones that the Wampum team is managing.
Pallets,
So we have over like 10,000 pallets at a time.
Which is incredible.
Yeah, no,
I mean,
it's crazy to think about.
It is crazy to think about.
What's like a square footage for that? I mean, you can probably stack, 3 pallets high here?
So,
or 2?
Yeah, some of them can. I mean, it depends on the customer. Some of them have product that they allow to stack, and some that don't.
And most of what's in this facility is not stacked, correct?
I think
Because you have such economy of, you
Yes.
have so much floor space That it's not like you're paying $10 a square foot for a warehouse where you're trying to take advantage of the cubic volume. Here it's like, just spread it out and make it easier to pick up.
Yeah, and honestly, some of the tenants that we have are, I don't want to pay for 30-foot warehouse because I'm more of assembly, or I need more floor space. I don't necessarily need a rack that much. And so this works out really well for them because they both get the efficiency of our pricing structure, and they're not paying for the volume, which they're not using anyway.
And, you
And what's the
mentioned
final,
pricing.
really,
Go ahead.
before we go on, what's the third business line in here?
Yeah,
So there's the real estate, there's the 3PL, and then we'll just wrap that up because I feel
Yeah,
like that
so-
has been an ongoing thought that we've been
On-
trying
on
to
those-
See if we can make it last the whole podcast.
I mean, I'm the ADHD one here, people. If I'm bringing us back around, that's a problem.
Yeah, of the 500,000 remaining outside that's not leased, 300, I call it, is 3PL. 200 is what we call climate-controlled vehicle storage. And then the other 1.2 million is vehicle storage that's not inside a climate-controlled warehouse. So that is climate-controlled, just not humidity-controlled. So we have seasonal vehicle storage there.
Temperature controlled.
Yeah,
but
temperature
not
controlled, but not climate controlled. So,
Right.
from like kind of September, October, November, we have kind of a couple thousand boats, RVs, cars coming in, and they're getting off the RV, resorts or the lakes.
Right,
They're
the
coming in, they want to store it somewhere, and they want to store it inside during the winter. So we take they move in, and then call it March through May. They're coming out, and the humidity level starts to rise in our unimproved warehouse, so it's best that they vacate.
One of the things that's most amazing about being in this facility is the enormity of it. When you come into the facility, you're driving with 18-wheel trucks that are passing you back and forth. You said 10,000 pallets, huge warehouse spaces, thousands of cars and vehicles and RVs.
Yeah.
It's like a traffic jam.
Yeah.
There's so much activity that's going on here, and it's all subgrade.
Yeah, you drive by it on the road and it doesn't exist.
It's an amazing logistics.
We actually just had a tour here with economic development executives from across the region a couple weeks ago, and one of the gentlemen has driven past the Wampum Underground for 30 years, and he came on the tour only because he was like, I never knew what was inside there. It's fascinating. He was blown away, and that, it's one of the challenges of owning an underground mine, right, is that nobody really knows that it exists because you don't drive past it and say, wow, look at that big building.
Exactly.
Right?
Exactly.
And it's so unique. There's actually been 3 movies that have been filmed here, is that correct?
I think I know of 2.
I think there's 2 Dawn of the Deads.
Oh,
I
and
thought
then
it
there's-
was just one.
Just the one?
Okay.
Okay, and then there was another one that,
The Last
forget the
Vampire
name of it.
Hunter.
Pardon?
The Last Vampire Hunter.
The
with
Last
Vin Di-
Vampire.
Vin- with
I
Vin
think that
Diesel.
won some awards, right? It was
yeah.
I'm
a Razzie.
unaware, maybe.
critically acclaimed.
I did see the movie before I got involved,
Okay.
and somehow someone told me about that, and I was like, I know which scenes, and now it clicked, and I don't know, it's funny.
So you just mentioned before you got involved, you get a phone call in May of 2020, hey, there's this underground building that's got these 3 businesses. Immediately you were like, I want to do this. Like, talk us through the mindset of,
Yeah.
I'm intrigued, I want to do this, and then, oh, by the way, I've got to raise a whole bunch of money to make it happen.
Yeah, well, I mean, you called me, and it was May, maybe early June 2020, and you kind of described it to me, I think even before you said it was an underground line. So you were just kind of describing the businesses to me, and it sounded really intriguing to me, and there was scale to it. And I happened to, my career in real estate has always not been super focused. It hasn't been all I do is multifamily value add, or all I do is, flex industrial. It's never been that way. I've always kind of done multiple projects in multiple regions.
We're going to come back to that here in a second, for sure.
Yeah, so it was never that's not what I do. It was how does this make sense? How can I make it make sense? And it seemed really intriguing. And obviously, there's a whole operating business component here too that we can get into that, I've never been involved in. But, once you dig in and try to categorize the risks in different buckets and try to, underwrite and forecast and, leverage correctly to kind of make sure you're protected on the downside. And that was, I don't know, it was interesting. I was intrigued right away. You guys had Scott on the podcast. I called Scott. I knew he was flying in June 2020 as I was, and I was like, I need you on a plane in 2 days. And I'll tell you why later. But
I'll tell you why.
Buy tickets.
I'll tell you when we get there.
Buy
You'll
tickets.
love it.
Well, it is wild. I mean, it's the first time in my career that I left we'll call it a pitch, when I was getting interviewed to potentially sell it on behalf of the former owners. And I remember saying to you, if I don't get hired, we need to buy this.
Yeah.
Yeah,
you called me a year before that. Like, it was a year before 2020.
right.
And I remember where I was, and you were describing this to me, and in abstract. So I had no idea I had no idea it was underground.
I was
had
keeping my NDA good. Exactly.
You were just like, this is interesting. This would be really cool, and I was like, sounds amazing. So I had this in the back of my mind as something that you were, was out there. And so when you called me, I just jumped at it.
Yeah, it's pretty wild. You mentioned not being in a lane, right?
Yeah.
So talk to us about that. I know it's something that Paige, now 4 years in the business, has questioned, not just internally, but externally, gets questions about being a generalist versus being in the lane. And in the real estate business, there's a lot of people who are like, I only do landlord representation in industrial product in Western Pennsylvania. I only do master brokerage work, retail nationally. You mentioned very directly, you were never in a specific lane. Talk to us about that. And even how you went from finance to real estate.
Yeah, so I started off, my career started in basically when this great financial recession, when the world was kind of blowing up, and I happened to be working.
08, 09.
Yeah, 9, 10, when and I went to go work for CMBS Special Servicer. So I saw all the blocks.
I wish I could go back to those days, knowing what I know today, and relive those periods.
So I was just seeing loans that were underwritten where people were just losing. And it was all the asset classes. I saw all the people that bought, the office properties from Blackstone that had just closed on it, from Sam Zell's ELP, and
Rest in peace.
yeah,
Yes.
just unfortunately that news broke yesterday. And it was all the different asset classes, and then from there, I was kind of recruited back to Chicago and for basically a capital raising shop. It was an investment bank that all they did was raise money for really big institutional type operators.
So you went from bureaucratic lender servicing to now we're going to go
And it was
raise capital.
Right. It was small. So that was probably, I think literally every time I've switched companies, it's been smaller and smaller and smaller.
But you said lender special servicing, correct?
Yeah,
The troubled assets.
Yeah. So it was actually kind of like a hedge fund with the special servicing. So we were both working on the special servicing, and our work was leading up to, them investing capital in the tranches at CMBS. Went from there to helping raise capital for institutional type real estate operators. They had, they called a fund of funds business, which were basically incubating platforms and teams with a specific strategy and funneling capital to them. I felt like I was a little too far away from the deals, being a deal guy. And Scott, I told that to Scott, and Scott had just started his own firm, but it was moonlighting and helping a different group that had just taken down a big REIT through bankruptcy, and he's like, they're looking for a guy. And so I went to go work there, and I was there for 7 years.
Okay.
And we were digesting this REIT that they just bought that had a really interesting financing structure. And we did a bunch of different stuff. I was doing JV deals with Scott, buying, flex industrial shopping centers. While I was there, we built a senior housing development platform because we really liked that space, 10 years ago. And, we did a huge land assemblage in Florida.
And that portfolio was massive, billions of dollars, correct?
It was I think the headline number was $550 million.
Okay.
Yeah, and so, that was really interesting in that you were basically buying a portfolio of single asset, GSA leased, first generation build-to-suit assets. You were buying like a weighted average lease term of like 4 on a portfolio basis, and you're extending the leases individually and then, getting cap rate compression and selling them off one at a time. So that was really kind of my introduction to kind of the single tenant, the way to create, value add returns in the single tenant world. And, we did a bunch of different other things, and to their credit, they just let me kind of do, like I was working on that stuff, but they let me go do business development and other stuff. I was like, in 2015, I was looking at like frac sand and like a bunch of different other stuff, and they gave me that real flexibility. So I never felt like I was limited to any kind of asset class, and then I kind of started gravitating. And in the back of my head, like we thought senior housing was interesting, but in the back of my head, I'm like, how would I ever do this on my own? Like in the back of my head, I'm always thinking like, like if I left and I wanted to go do this, and because I've always wanted to kind of do my own thing, like there's too many players. It's construction financing that's really hard to get. It's a big development project, so you need a lot of capital even before you get to close. And it was just long timelines, and it just didn't, the way I like to think about risk, it just didn't match up with my temperament, really. And so then I started switching into what I thought was more interesting, like kind of single tenant, niche-y opportunities, but they were really kind of smaller deals. And, for where I was working, it didn't really work. So, that's kind of...
Because they wanted to put more capital to work.
Yeah, and to their credit, like every time you do a deal, there's reputational risk. And if I'm going to put reputational risk, it needs to move the needle. And at that firm, it was just, it just didn't make sense. And, we were building a senior housing development company that, had hundreds of $1 million pipeline. It didn't make sense for me to go do $5 or $6 million, $10 million deal. It just didn't really align with the direction. But they gave me the flexibility to do it for a while. And when I was on my own, I got lucky in that I was working on a deal that I was basically able to leave with. Like we negotiated exit, and I was able to start Bellevue with a really interesting deal that was heavily structure driven, which is kind of like the way I like to think about real estate.
Yeah, you love the structure and the model. Alyssa on our team said she wants to sit through a modeling session with you. I was like, no, you don't.
Your brain will explode.
Oh my gosh, there's so many different places I want to go, and we have such limited time. But before Bellevue, and just because we're on the modeling topic, you said something to me yesterday that really blew my mind, and it has to be a part of this podcast. You didn't know Excel until you were in college.
Yeah.
And now I would argue you're an Excel wizard. And I know you're going to be self-deprecating and say no, whatever, but I work with lots of people, see lots of spreadsheets. You're fantastic at it. But then I obviously am a father of a few young kids, and like they're doing Excel in grade school now.
Yeah.
And so you're now in a finance position, obviously an Excel wizard. They're learning it before you even knew it existed. And now I'm curious, like, the next wave of kids, if they'll even know what Excel is,
Right.
Because of everything that's happening in AI. So maybe that's just a statement rather than a question, but I think it's fascinating that you didn't know Excel till college.
Well, my comment on that is, so I worked at an investment bank where people really knew Excel, but I've gone kind of downstream to sub-institutional asset classes, and I feel like my Excel abilities and modeling abilities and thinking of structures, like my competitive advantage in these sub kind of institutional size deals.
So you're bringing the institutional level.
I like to think that like, hey, I have this a little bit more of an institutional kind of background that I'm bringing to smaller asset classes, and then just like layering on, like putting on the risk on the table.
Sure.
So when you say sub-institutional asset class, what are the criteria for that? Like, what are the boxes that, is it just a dollar value? Is it the tenant mix, the risk? Like, what
It's a really good
qualifies something as a sub-institutional?
I would say it's the dollar size, and I would say the credit profile of the tenants. I think, unless, if this institutional type capital partner was trying to put to invest in this space, they wouldn't be able to do it directly. They would need to invest it through some sort of platform or some sort of, investment manager that had expertise. So they would be removed, like at least one step removed, just because, we're talking about, sub $10 million, sometimes sub $5 million type deals. And if they're really wanting to put a lot of capital out the door, they wouldn't be able to do it directly because it just wouldn't move the needle. And if they're, the credit profile, sometimes are really mom and pop. And the way I think about a lot of what we do outside of wampum is like really single tenant type related risk. And so sometimes you're a real estate first investor and you're like, I'm buying really good real estate and I can take the risk on the credit, the mom and pop, because I like the real estate and I know if they go out of business, I can replace the lease with somebody else. And sometimes you're playing your credit game, you're like, this isn't necessarily the best real estate, but there's much better credit here, and maybe the pricing is off because the real estate's not good, or the location's not good, and institutional investors are just not looking at that location. So you I think being able to play both sides is part of the competitive advantage.
And, it strikes me interesting that we're talking about $5 or $10 million deals as not being institutional, but there's clearly a large segment of the population in our audience who a $5 or $10 million deal seems totally untouchable. We're talking about it like it's monopoly, which is kind of fascinating. So, even before Bellevue, before the REIT, before the special servicer, like, talk about where your background's from, where you grew up, like, was it always that a $5 or $10 million deal was no big deal? Like I think it's
no, definitely not.
As we sit here and we're saying it out loud.
Yeah.
Like,
I'm super polished. This has been my whole life. My whole life is no. So
that's the fascinating thing. There's nobody at this table who grew up where that was like a norm. So I'm curious, like, about the background and how you got where we're at today.
Yeah, I mean, so I was born in Ukraine. I was born in Kiev, and we immigrated as a family when I was 3 years old.
And if you're not paying attention out there, there's some shit going on in that part of the world right now.
Yeah, part of the reason we wanted to leave was, first of all, we didn't like communism. It was a communist country, part of the Soviet Union back then, and also just the unstable nature of the politics, the people there.
Hasn't changed much.
I think when my dad says when we were immigrating, he's like, eventually you will see tanks on the streets here, and he was totally right.
And that was what
Really?
year?
89. Yeah.
89.
Yeah.
So how old were you?
I was 3. Yeah.
Wild.
So, I mean, they were considered educated people earning. My dad was fairly entrepreneurial for the time, right? He was taking advantage of some of the openness that was happening. So they were, pretty probably upper middle class for that, which in that environment doesn't mean much, like from an American perspective. But when they immigrated here, we were living in my aunt's basement. My parents were, delivering pizza and washing windows while they were trying to go to school and get jobs. And
I don't mean to interrupt, but historically, the wall didn't fall till 92, correct?
Yeah, 91, 92. I mean, at one point, my dad wanted to go back. He's like, there's so much opportunity. And my mom's like, absolutely not. And that was the right decision, too. And, I think they always had this mentality that, like, hey, we're in America. Like, we can do anything here. And, like, they really instilled this mentality. You can do anything here. There is no ceiling. And they changed careers multiple times and tried to see, and they would help each other if one was taking more risk or the other. My mom went to nursing school and my dad was doing this. And then my mom was established so that he could take more risk and do something else. And it was just slowly building, became an insurance salesman, and then, they got into the mortgage business. So that kind of started my exposure to kind of finance.
Okay.
And, then, there was like buying houses here and there. And so I would kind of went from at 10 years old thinking I was going to be a doctor, to like, I actually like finance and business more. And I remember, my dad day trading in like the late 90s or in early 2000s, and then seeing like what happened there, thinking like, okay, I don't like having no control about like what's going on. It seemed, and then the exposure to real estate and finance, that's really kind of where it took my path. And, my exposure was residential real estate, and until I kind of really went to college and like learned about commercial, that really kind of put me on a different path.
Where you went to school, was there an education component on commercial real estate? That's not something that you see courses for or areas of studying in most colleges.
There was a finance with a concentration in real estate. So there were a few courses. There was a real estate club that had speakers come to town, and there was one speaker who's like, hey, I'm part of this organization. There's a lot of mentors that you could do job shadowing on, and I was like, well, this is amazing. And so I would go like almost every Friday, like drive 2 hours to Chicago, do a day, and that's actually where I met Scott my freshman year of college, who we're now partners with on the Wampum Underground.
Think about that. That's incredible.
Yeah,
That's incredible.
Yeah. I mean, so met Scott there. He helped me get, he connected me to the private equity job that I worked at, that we did deals together with, and then, I called him on this, and now we're partners on this.
On a significant asset. I mean, tens of millions of dollars.
Yeah.
And you met because you were in college and said, I'm going to drive 2 hours to go.
Take advantage of a mentoring opportunity.
Yeah. I mean,
That's awesome.
It evolved. I mean, yeah. So I was doing, big deals at the PE shop and doing small deals and like really seeing what the capital raise was like. And, we did a couple of smaller deals, and then it just kind of like, okay, now we have some trust with investors. We can, rinse and repeat and kind of snowball it. And Scott had a longer track record than I in 2020 that helped convince some new investors to come in, and it's worked out since.
You made a comment kind of in passing, but I think there's something there. You said from an American perspective, right?
Yeah.
So, your parents, who I haven't had the pleasure to meet, but they clearly were entrepreneurs, and it didn't matter where they lived. They just were entrepreneurs, but they weren't going to be entrepreneurs successfully there, but then they came to America and everything changed?
Yeah, I mean, I think my dad was kind of entrepreneurial there. He was considered doing black market stuff because he was selling blue jeans on the street, and doing business was black market. And so he was always kind of on the edge, maybe a little bit of that. So he had that mentality, and definitely just felt like he could do it here. But they did it very slowly and methodically. Like one person was taking more risk while the other one was more stable, and kind of worked off of each other. And it just kind of lived below their means, saved, created capital bases, that really snowballed. And they happened to be in the right industry, in the mortgage industry, for the last 20 years, so that helped too. And one was more current income, one was more investing, and kind of going back and forth, and made mistakes for sure. My first commercial exposure was my dad working on a shopping center deal that someone brought him, and relied on somebody else's kind of assessment of it, and they partnered, and that didn't work out. But get up and keep going, and that really taught me. First of all, know what you're investing in, and really do due diligence, and don't rely on somebody else's underwriting or assessment of it, and managing risk. That was not any one deal should be able to take you down, right? And really protect the downside.
So when you are approaching, I remember I joined Totum in 2020, shortly before. We were engaged to represent the previous owners to sell Wampum. And one of my first exposures to you was Kevin had sent you the OM, and within 3 hours, we had an 8-paragraph email of questions from your analyst.
Is the best
analysis.
question.
And it was
Ask her ever.
So I'm curious, because I know that the attention to detail that you pay to these things when you're analyzing? Do you have a process that you follow every time? Or like, how do you determine on something as complex as this, where you're gonna start?
That's a good question.
And like, what's your process when evaluating?
Thank you for remembering that, first of all.
Yeah, I was blown away. I was like, oh, okay, Rain Man. I was like, this is wild.
I think every banker we talk to now is like, okay, Rain Man.
It was impressive.
Well, so
I knew nothing then, but I knew enough to know like that's some serious brain power behind that email.
well, okay, so I think the working at an investment bank trains you how to work, to really work. I wasn't there very long, but like you understand like what it means to like put in the hours and get your stuff done. And I think that's part of the not just the analysis, but part of the reception to the broker who's representing and has the trust of the seller, and to the seller, like you're taking this really seriously, and that when I know you're putting in an offer, I know that like I want to be the one that like they've done the most diligence, they understand the asset the most. So like if maybe they're not the highest bid, but like I know that they're like there's a lot less surprises with their bid than anybody else.
Yeah.
And yeah, and I mean, I think you have to understand it right away. I mean, as much as you can, right? Especially
even
for
if you
something
don't-
like this, you just
Even if you don't understand it, you always have to ask the next question, and literally, you never run out of questions.
yeah, still
You know,
asking
and the
questions.
more information that you get, the better it's going to be. And like you said, they're going to feel more comfortable. This guy's going to go through with this transaction because he pretty much gets where I am.
Yeah.
And downstream, there'll be less hiccups.
Yeah.
So in understanding, I mean, obviously there are some names on the tenant roster that are household. You understand the credit backing that tenancy, but some of the, like, what kind of diligence did you do into each specific tenant for the real estate? What kind of research did you do into third-party logistics? Did you do research into, the boat and RV storage? Like, is that all? Did you essentially learn all of those businesses and about all the tenants prior to deciding, like, what kind of risk assessment you were making on this? Because I think we eventually want to segue into how tenants' credit can impact the value of an asset.
Yeah.
So how deep of a dive do you do into the tenancies of assets you're acquiring?
So one of the things I learned in the investment bank too was you want to build your models from scratch, right? And the reason, and I like to do it, like I don't really have much of a team, so it's like me doing it, and it really helps you understand the asset, especially for this, which has so many moving parts. And in building the model, you come up with questions like, well, how does pricing change over time? Or exactly how are you collecting revenue, and when does it collected, and how is your pricing structure different? And like there's seasonality in some of the like vehicles, there's seasonality, like how are you, if you take the last 3 months, does that really represent what the income is? And
So like building the model forces the question.
yeah,
'Cause-
because you have to think through it. It forces you to think through how,
To put it into the,
like
how to
do
put the information in.
Exactly, like how should I think about the cash flows going forward? And is the historical or these few months of data really relevant? Do I need more? So here, there wasn't a lot of lease term on the leases. Like, previous ownership was just like a couple of years here and there. And so like you looked at it and you're like, oh my God, I'm going to renew all these leases hopefully in the next 12 months. And we
Right.
actually did some while we were under contract because they were coming up. So you have the risk that there's no lease, there's no weighted average lease term, but a lot of the tenants here have been here a long time. So it gives you a little bit of credit that like, hey, they've been here 10 plus years. They've been on this like rolling 2-3 year periods of leases. And so that gives the historical nature of the stickiness of the tenant gives you credit, even though you don't necessarily have term. And then you have other businesses that have their own different risks, and when you kind of combine them together, you kind of get a little bit of stability. So the vehicle storage business, obviously they come in and out every year, but when we were doing diligence, there's 300-400 people on the waiting list to get in here.
Right.
So you're like, okay, so clearly there's a stickiness here. Clearly there's probably pricing power for us to push rents here. And it seems like a really secure part of the cash flows. And then the most unique one was the logistics business, because like that's truly an operating business. It's not like real estate at all. It's
Right.
almost like, you know, it's almost
It's
like a
not
hotel, because
seasonal,
people
it
are
just
coming
ebbs
in
and
and out
flows
constantly.
constantly.
You don't know what, you know, next week's demand is going to be or 2 months' demand is going to be. So we got lucky, I think, in just the way this laid out, the structure laid out. The logistics business was the smallest part of the three, was the smallest of the three businesses. I was able to work with the seller to get enough historical data for the different clients, and over years that I could come up with a number. I'm like, hey, there's volatility, but if I base this here,
Sure.
and we finance off of these numbers, that we should be okay even if there are dips.
Even if there's valleys.
And so like that was really helpful. And then the other kind of what I would call like arbitrage was we financed the whole thing like a real estate deal. So even though there was like this operating business component, we and the bank was willing to look at it like, hey, we this has been here a long time. We understand how you're looking at the revenue stream. We'll count it as like real estate revenue, just like the other revenue.
Because at one point you even asked the sellers to sign a lease on that operating business.
Yeah.
To help de-risk the situation,
Yeah,
right?
yeah, because I think if anybody would have looked, if a traditional private equity firm that buys operating companies would have looked at this and then looked at like maybe the multiple we were paying, it would have been like, that makes no sense. Like, this is kind of a sub-institutional size operating business. We
With
wouldn't,
huge peaks and valleys, yeah.
right, like we wouldn't pay that multiple. And then the real estate guy would look at it and say, well, first of all, this isn't real estate. I don't get it.
I don't understand
I don't
it.
understand it. Or they would say, that's a pretty good cap rate. You know, like if they were looking at it from
From a
cap
comp
rate-
perspective on a
Yeah.
cap rate, it
Yeah.
doesn't make any sense.
Exactly. So it was kind of, you were in this like gray area. And then, so I think that's where there was a little bit of value arbitrage, and then there was financing arbitrage on top of it.
And when you say the bank looked at it like a real estate deal, what would change if they looked at it as an operating company with real estate? Like, what's the difference?
Well, I think, you know, I think the most pressing difference would be the amortization period. So we were able to get a full loan that amortized over 25 years.
Like a real estate loan.
Like a real estate deal.
Okay.
So your debt constant was much lower. You weren't paying down as much debt, so we could have a really decent current return for investors,
Right.
which helped us raise the capital.
Yeah, and if you were going to borrow money on an operating company, you could never get 25-year amortization because the bank's like, I have no idea if this business will be here in 25 years.
Yeah,
And it did affect how much they valued that as far as the loan value,
exactly.
the loan
Yep.
amount.
Yeah.
How did you,
I thought we didn't like overly,
Yeah.
if it was a real estate deal, people are like, you know, this is quite lowly levered.
yeah, how did you balance out the volatility of the 3PL business? Did you underwrite it to a certain point, high water mark, low water mark?
Yeah, so when we were buying it during COVID, the logistics business, the 3PL business is almost counter-cyclical, because when the economy slows down, inventories build up because their throughput slows down, so all of a sudden they have more inventory, and actually demand for our storage goes up. Because they're, you know, maybe they don't have enough space in their owned warehouse.
And they're not
they
going to
need-
put any CapEx into a new warehouse.
Right, so they're like, oh my God, I need to overflow. So when we were, during COVID, that 2020, the inventories were growing really rapidly. And the logistics business was actually like almost peak revenue. And I'm like, I can't underwrite, because literally 5 months ago, you were at like the lowest revenue that you had in like 5 years.
Right.
So, you know, I can't forecast that out. So that's why Kevin remembers, and you guys remember, like I kept asking for more historical data, because then I was like, okay, what is the last 5 years of this business?
You went back 5 years?
I went back 5 years. I'm like, and I went back, not just by 5 years, but I went back by customer to see the volatility in the customers and what the customer concentration looked like. So there was also customer concentration risk too, because it was like historically reliant on just one or two
Relationships
that were like the
Yeah.
majority of the revenue for the logistics business. So looking at that and benching off benchmarking off of those 5 years of data is how I underwrote it, not looking at the current revenue.
No, absolutely.
Suffice to say, devil's in the details, right?
Yeah.
And it's not just number. It sounds to me like, you're not, you build the model for the asset, but it's still not just numbers. Like there's not a formula that makes it make sense. There's
Right.
additional understanding. And I'm curious if you hadn't had the intimate knowledge of all these things when you went to the bank to be able to explain X, Y, and Z, if they would have lended to a deal like this to someone who had a lesser level of detail.
Oh, no, they would
Like,
not
did you
have.
paint the picture?
They would definitely
No. Kevin knows the details. The bank was looking for us to be very knowledgeable about the asset, and were impressed that we had gotten up to speed so fast, and that got them comfortable. So that was one of the ongoing risks throughout the deal was, will we actually get the financing?
And I think that's something that I've witnessed over the career now, is that banks are definitely going to pay attention to the books and the finances and the numbers, but they're also really, really motivated to understand who the sponsor is, and does the sponsor understand what they're doing and why they're doing it. Like, it's very subjective, but I think it's really a strong piece of the puzzle.
Yeah, I mean, yes, definitely. I mean, we had no track record in owning underground space, or really like quasi-operating businesses. So it was really important to them. We obviously, like, Scott's company had hundreds of tenants at that point. So that was helpful. And they had a team that they were managing, and I was just one guy that, putting it all together. And so that was definitely a lift. Sam Zell, someone sent me a text this morning because it's so fresh in people's minds. There was a quote from him saying, and I sent that to you today.
I loved it.
I'm going to butcher it, but entrepreneurship is doing something you didn't really think you could do. Something to that effect. And that hit me. I was like, this is the perfect example of that. Like, who would have thought that?
And then not knowing that you couldn't do it. Like
then,
that. That's like the other piece of the puzzle, right?
Exactly. So this deal is like a perfect example of that.
Yeah. It's like not knowing what you don't know actually is a benefit.
Yeah.
In some regards. So, obviously this is an incredible space. It's exciting that you now have built some more warehouse, and
He did hint that they were going to fill it up with 3PL pallets. I don't know if you heard that.
I heard that too. This has been like the leasing assignment that didn't really exist, because it's always just full of pallets.
Yeah, we're going to build you space to
We'll
lease.
move them. We'll move them somewhere.
Full of
We'll move them somewhere. Let's get a lease. We'll move them somewhere.
Oh, man. But, obviously, Bellevue in the last couple of years has done a lot of really interesting things. So we've got two questions for you to kind of wrap up. Where'd the name come from?
It was, I was living on a street in Chicago called Bellevue Place.
Okay.
My wife said that sounds like a nursing home. So
It kind of does.
But I like the idea of naming the company on the street where we lived when I started the company. So Bellevue Street. I changed the place to street. I'm super creative with names, clearly.
It would have been Timber Glen for us. I don't like Timber Glen as much as Totum, but
Yeah.
the street idea, I like it.
Yeah.
So the street you were on. All right, and what's your trade secret?
Yeah, it's, I've been trying to think of a good answer for this. So I would say we've touched on some of it, but I think we didn't really touch into the other things that Bellevue does. But I think the trade secret is bringing that institutional execution and thought process to the sub-institutional, and then, but everything I do as a partner. So it's bringing that and executing on behalf of my partner, who maybe is local, who knows, who's bringing in the opportunities, and because it's just me, they get to work directly with me, and there's just a bigger pie to share because there's fewer, people to go around.
But at the end of the day, the relationships really are the
Yeah.
underpinning.
The Bellevue
it
Street
all.
is entirely dependent on relationships. There is no Bellevue Street without relationships.
There's no totem
Yeah.
without relationships.
Yeah. So it's just being a really good partner that people can rely on and execute and be trustworthy and just do what you say you're going to do.
Amen to that.
True.
I think that's a wrap. We
Let's go get
didn't do-
warm.
Well, let's go get warm. It is
shaking.
chilly. Everybody's shaking. Michael, are you gonna Vanna White the Great
Well,
Lakes, which
actually,
is really near and dear
That's
to me because
really-
this is
You should take this one.
no. I mean, Great Lakes Brewing Company, fantastic. Cleveland, Ohio, Ohio City. They make some of the best beer out there. I was pleasantly surprised to see that on the table today. Did not expect that. And
I should mention that we shut off the HVAC units because they made too much noise. So it would normally be much warmer in here.
it's always the same temperature. Just
Yeah.
Hey,
We would
it's a
have
great
a-
temperature for storing wine or beer.
or pallets
Or-
of MRI equipment or
Yeah.
dried dairy.
It's just not great to sit in to film 2 podcasts.
Batteries.
But there are offices here. There are people.
Yeah.
and It's not. If you have office space built out here, it's.
The offices are very comfortable.
Yeah.
Yes.
All right. Well, episode
All right.
25 is in the books.
Thanks,
Alan,
Alan.
thanks so
That was
much.
Thanks, guys.
Yeah.
Thank you.
Our pleasure.
All right.
We'll see you next time.
In the new office. Woo-woo.
Oh, yeah. New office.
Great.
Sweet. I am